Good afternoon. This is Mr. Not Advice, my end of the day update for Thursday, August 20th, 2026. As always, this is for entertainment and education purposes only. Well, all eyes are on interest rates as well as the Middle East. We had a little bit of a bounce, probably driven by Korea's SK Hynix, who announced a record buyback. But other than that, Thursday was pretty much a mess for risk assets out of the gate. Treasury yields recovered all of Wednesday's losses following the Treasury's shocking announcement of a buyback boost. Let me say a word about that. I think this is only the first step. I think that if oil remains elevated, that we're going to see and rates continue to go up in the long end of the curve, 20s and 30s, I think we're ultimately going to see direct outright purchases, which would be a further expansion of the balance sheet at Treasury, which means more debt, even though we just passed as a country $40 trillion in debt. But remember, when Treasury goes in and buys debt, all they have to do to create the dollars on their balance sheet is simply add another line, literally. I think that's something that came out of Bernanke's mouth of how easy it was for the US to do that. So right now, the Besant, I guess, put on yields is not working as yields rose and again pretty much took out all of yesterday's improvements, or smashing down depending on which side you're on. In actuality, the 10-year is actually trading as much as 3 basis points higher than yesterday. And the 30-year yield briefly erased all of its losses before dipping modestly lower in the afternoon. There's been a lot of commentary about Bessent's move and how it came out of nowhere. JP Morgan went so far as to slam the Treasury for it lacking credibility, saying that the intervention could backfire dramatically, leading to higher term premium and yields over time. Why would that be? Well, because there's probably blood in the water for bond sharks right now. They know that they are now acting against or competing against the US Treasury. And the US Treasury, in order to use more of its firepower, which it has really an infinite amount of dollars it can print, and therefore an infinite amount of debt it can buy back, but it won't be able to do that without the destruction, further decay of the US sovereign balance sheet. And so it's a very careful balance because if they do outright purchases of the debt, which expand the balance sheet, that only makes the thesis that the US fiscal picture is getting worse because it's going to make the $40 trillion in debt even worse. One way to look at what's going on is they are refinancing. It'd be like taking a 30-year mortgage and refining it at that's currently costing 3%. And Treasury is refining that with a 1-year mortgage that costs them 4%. So, from a mathematical standpoint, it makes no sense, but that's not what's going on here. Treasury's very much trying to keep a lid on these rising rates. And as I've discussed at length, those rising rates are both a function of the deteriorating fiscal picture, both in the US, even though the US is the strongest in the world, but more importantly, the global yields are rising up. So if you've got Europe and you've got Asia and their rates for their debt are going up, it's going to suck dollars out of the treasury market, buyers out of the US treasury market. So you're going to get a natural lift from that. And then, of course, we have the additional factor coming in of all the money that's flowed out of what normally a lot of it would be going into treasuries, into the quote unquote investment grade securities for AI hyperscaler build out. So it's a double whammy right now at this point. Another reason why we saw a move higher in the rates today is that Trump announced an economic D Day for Iran, with Besant saying that they are about to unleash the most powerful economic weapons they have against Iran. That spiked oil to a 1 month high, pushing Brent just short of $95, with West Texas Intermediate crude up to $88, which is the highest level since July of 2024 or July 24th of 2026. And oil has been up pretty much constantly since August the 5th. Walmart came out today and it had a slowdown. It grew below Wall Street's estimates, and they blamed the slowdown on disappointing sales at health and wellness, the pharmacy division, which could be attributed to the drop in prescription prices that Trump has helped engineer. As a result, Walmart stock plunged more than 10%. It moved below the 50, the 100, and the 200-day moving average. So I will be looking for a short in Walmart. Ironically, after today's sell-off, the S&P got pulled back to where it was on August 4th when none other than Scotty Bessent sparked a historic call-driven rally when he said that a deal with Iran was going to take place in a day or two. So that's where we are, all the way back to August 4th at this point. The S&P 500 is now down 1.7% just for the past week, the worst weekly performance since the last week of June, which was right before the July meltdown. Hyperscaler spreads continue to move up again, as well as hyperscaler CDS are also blowing out again, with both Oracle and Nvidia trading at the widest on record at this point. Most other names are also moving in the wrong direction. By the way, I don't expect Oracle, Google, Microsoft, any of these companies to default on their debt. It's not going to happen. For the most part, they have fortress balance sheets. I just that's not going to happen. And I think some of this heightened risk in CDS for hyperscalers is because those who sell CDS have a very fertile environment to sow fear at this point. Not all of it, but a lot of it. Gold did very good today, extended on yesterday's gains, and now is not only above 4,500 for the first time since June, but it just took out its 200-day moving average, which is a very bullish indicator for gold. However, gold's melt up pales in comparison to Bitcoin and Ethereum. Bitcoin and Ethereum both have surged by about 15% in the past day, and it wasn't driven by any particular news. It wasn't driven by the Clarity Act moving forward. It was driven by short sale liquidation. So I don't know if it's Jane Street, but I do think it was a mechanical on when I say mechanical, I think it was on purpose that this happened. We entered CCL on a break, and while we had to pay a little bit up for it, we closed the day with a 12% gain. I wouldn't be surprised to see this bust through this 25 support level. And if it does that, we're targeting 23.45 to the lows. Across the board, small caps got hit very hard today because the Russell 2000 was down. The Russell 2000 is down because right now the market's focus is entirely on the 10-year yield, which, as you can see, yesterday we hit a low of 4.63, and now we're back almost at 4.7% today, with the high being 4.74. So yields are back up on the rise, and that's despite the fact that the Treasury is going to be buying back at this time 30% of its own debt. The one company that did well today was Micron. That helped, although it did not help drag the other semiconductors up higher. It merely kept them flat. Looking at EOSE today, EOSE is going to continue to drift down until such time. I think we'll get a two handle. I'm prepared to short it at 311 until such time as they give an operational update. If they don't do that, and we still have continued rising rates, this is going to absolutely push this down to a two handle. PCT today also getting hurt by the rising rates. This was, if you remember, this was our original buy level. And when it broke up through that, we were looking to get long, but we stayed off the trade because of our rules. And here we are a couple days later, and this I have an alert here at 6:59 because look at these lows back on August the 6th. The low was 662. August the 7th, 660. We break and close below that. I absolutely want to get short. Wheat today, not a great candle, by the way, but we do have the another day, the third day in a row of higher highs and higher lows, and we are within shouting distance of 2608, which is where I think we need to break for our trade to break even. I think on a long-term chart, wheat has a very good setup going into the winter months, and we are all the way out into uh, January. But this is the wheat chart if we're looking back years, back to 2023, how high it was. So let's not forget that a good portion of the wheat crop, global wheat crop, does come out of Ukraine, and they actually had better than expected, shockingly. But they're still operating at a much reduced level. The price of gas continues to go up. Refined products continue to go up. So I'm looking at getting long tomorrow gold or gold miners. I have to look at the charts and see if we have entries on those. But I do like the fact that the market is trading off of more macro and more market specific news and not just the war is over or the war is uh, not over or we're going to continue shooting. So I'm watching these gold miners here. I have a buy level all the way up here at 136. It's literally, it's really not that far away. And I could actually do it here at 131 will be my buy level on gold junior miners. So other than that, we'll see how we do in the CCL trade, the new wheat trade, which is in addition to my leap trade, EOSE and PCT. I am looking to short both of those. But when I say short, remember that my trades are only 3 days long, and if I don't make a profit on them, I'm out. These are not long-term trades. I mean, for example, our ConocoPhillips trade that I closed yesterday, that was a 9-day trade. Oh, the one of the companies I was looking to short was Moderna. Before I could do it, they had already dropped, but I'm still watching this to short this. Uh, we need to see less of a volume spike, but I'll put an alert down here at 114, a break below that. The key function of that, by the way, it didn't spike necessarily because they found a new cancer curing drug. It was the fact of what that drug and how it was designed. What they do is they take the actual cells from the person who's suffering from cancer. Then they, I guess the word sequence it, and they customize the treatment so that when it's injected into the person, the drug actually knows which cells to attack for that person's body. So it's one of the first drugs that is being announced that was done with the help of AI. Um, However, the of course the press got a hold of it and just put a tremendous amount of bullshit into it. I think that's a good shortable stock too. Looking at the overall market, today was a fairly quiet day in the market. We are nearing some support level right here. You can see this low. If we give this low up, it's a pretty quick ride much lower. I don't know if that's going to happen yet. I want to see with the next funding or the next treasury action, the ES is already broken down from this low right here, this support level. Where's the next stop? All the way down here at the 50-day, it's 75, 74. So another 120 points lower, which is, very small percentage. But at the same time, I mean, we're talking about 1.5, 1.6%. But remember, or the weekend update I put out there that I think it was Goldman was looking at this pullback to drop about 3%. Well, we've dropped 1.7 already. So another 1.5, 1.3 would put us right at 3% and right at the 50-day moving average. So I suspect tomorrow we're going to have continue selling. I don't know what the Fed could possibly do in order to, or the Treasury could announce in order to mitigate some of this rise in interest rates. And another thing is the Japanese yen today. We didn't get an equal opposite, but certainly this intervention here, we can see the effect of it that it's not working out. Remember, an intervention is not meant only to cap the immense the upward movement, but it's uh, done to create a new trend. And so when you look at this, you have to realize that having a little bit of this choppiness, it did not create a new trend to the downside. In fact, that trend was bought and it's being fought against. So SpaceX, we had another release of shares from the IPO that caused SpaceX to dip below the IPO level of 135. I think SpaceX is a fantastic company to write cover calls on. I did some rough math. And if you did it 12 times a year, you could generate up to a 50% return. And that's choosing strikes that are anywhere between 15 and 20% out of the money on a monthly basis. So it's one of the things I'm doing, helping educate one of our members on. All right. I hope you have a great day. Friday tomorrow and almost the end of the summer. And I will see all of you in the board.
Yeah, we gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm. Feel like I'm volatile, explosive. Get close enough, you notice your girl like out of character.